Joining us live from Melbourne is Evan Lucas, Chief Market Strategist at InvestSMART. Evan, thank you very much for joining us there. Tell us, first of all, your thoughts on the trade war and the influence on markets early next week.
Yeah, good morning to both of you. Look, in terms of where it sits, it's probably more likely to be upside than downside. And the reason for it, all of the negativeness is already priced in, and particularly considering that we saw the tit for tat last weekend, the end of the G7 meeting, the fact that we saw 280, character tweets that the president was bringing out and then backed away for the rest of the week. I'm more of a longer-term view. I actually, unfortunately, believe that it's probably likely to get worse before it gets better. And that, I think, also needs to be part of the overall thinking. There was hints on Friday night, even before our market closed on Friday, that the Chinese were starting to suggest that they would actually go back to the talk table. But again, it's all rumour, it's all innuendo, and again, the man on screen can always change his opinion and put it out very, very quickly. And that, therefore, is why, if you look at volatility, so you look at the CBOE in the US and the volatility index there, it's at the highest level it's been in 2019. If you look back here in Australia, we too have just been through our most volatile month that we've had for this year. So it is clearly front and centre. I'm a little bit also more pessimistic than what both of you just opened with regards to the tariffs coming on tonight. It will happen. I don't see anything to actually suggest that it will stop, and it's clearly going to come in at 15% rather than the initial reaction of 10%. So all of that is a done deal. It's a question more about the materials that the president pushed out to December to miss basically the major from trading numbers being Black Friday, Business Monday, etc., and then also going to the Christmas sales. Those materials, they're the ones to watch, and they can be the positive or negative. If there is all of a sudden a back down from the president saying that actually we're not going to put tariffs of 15% on those additional numbers, that would be a positive step. They're the ones that I think he's got bargaining to, and that's what the market will probably likely to be watching. But all in all, just to conclude this, I'm a little bit different. I think at the moment, if you want to look at any form of market mover over the next 3 weeks, it's going to be how the president reacts to the Federal Reserve. The Federal Reserve is due to meet at the end of this month. Market pricing and expectation is that a 25 basis point rate cut will come out of the federal funds rate. But we already know the president is well and truly ahead on how aggressive he's being at them. And there is, a lot of being said around that rather than the US-China trade war for probably the next 3 weeks.
Evan, I wanted to ask you, obviously the other big news across the pond, Boris Johnson taking the big decision to prorogue Parliament, the consequences for that in the European markets and especially UK. This has been going on for a very long time, this level of instability. It hasn't arguably really hurt the UK economy that much yet. Is this time going to be different?
That's always been the question, hasn't it, Leo, in terms of, is this time different? I don't know. And that's deliberately why I say that, because what happened last week was so unprecedented and so, quite, out there in terms of how the whole progress of this system has been going around Brexit, that you would have expected this to actually have a bigger effect. And the interesting thing is it didn't. The way I gauge that is actually have a look at the pound, have a look at obviously the pound to the US dollar, off the back of this announcement that obviously the Queen had gone along with what the Prime Minister asked for. The pound actually rallied, and if anything was going to push it back through 121, even going towards 120 US, it didn't do that. It actually went back to 122 and shows you that that's probably the way to gauge it. The FTSE hardly moved off the back of it. So the answer is, until we actually see what Brexit will be on the 31st of October, the market doesn't know.
Right, well, it's going to be fireworks for sure this week when Parliament does sit in London. Coming back to our market and the reporting season, of course, we've got second half growth figures this week. Overall, briefly, Evan, how do you see this reporting season?
So overall and briefly, looking at the forward expectations, so earnings growth was slightly better than expected. The overall number was about 3.6% across the whole market. That was on sales. Earnings growth, however, was flat. So it's a pass mark. If you look at the outlook was, again, what the market had expected. So that's the way to look at it. Very quickly, what was interesting and a standout, discretionary and staples were better than expected. And getting back to your point around, the second numbers coming up this week, that actually might give a little bit more confidence that consumption on the household level isn't under as much pressure as some has been forecasting. That was the only thing I saw.
All right, just get your view on a couple of stocks that did report this week. Wesfarmers, I spoke to Rob Scott. Of course, he's got Bunnings that's going like a train, and then he bought Kidman's. But a bit of an issue still with Target and Kmart. Have a listen to this.
A difficult decade, I guess, for Target, and Target, like a lot of other retailers in that middle market, have been caught with a lot of competitive threats, a lot of competition from international retailers, a lot of competition online. I guess what we have done in the last 6 to 12 months is move the Target customer proposition further away from Kmart.
Yeah, Evan, retail still pretty tricky.
Yeah, indeed. And we always knew that, now the Kmart numbers are not separated from Target. It's one overall group. It looks worse, and that is the Target numbers. It's exactly what Rob Scott's looking to. And it is, again, as you said, if you look at the part of discretion, it's been really weak. Myer, obviously David Jones doesn't report here anymore, but those two were pretty horrendous in terms of what they're showing you, and that's the Target market. So Kmart is still basically doing all the heavy lifting inside that division. The rest of the business, as you said, is pretty reasonable. They'd be happy with CEF. That is doing better than expected. But Bunnings is, as you said, I think that's a great word, the train. It is growing. It's still 4.5% per annum, like-for-like sales.
And interestingly, I noticed Big W, because Woolworths, of course, reported Big W struggling as well. But we spoke to Brad Banducci, and overall, Ushi's seemed to be doing it for him in the supermarket. Here's Brad Banducci.
Challenging start to last year, the phase out of single-use plastic bags, we mis-executed a few things, and then our competitor had a key collectibles program. So we were sort of playing catch-up in the first half, but I think that really brought the team together, resilience, focus on the customer, confidence to execute our plan. We started doing that in the second half, and we got some momentum, in particular in the fourth quarter, and of course that's rolled into the last 8 weeks, and we're very fortunate to have the Lion King and the Lion King Wishes.
Your thoughts quickly on Woolworths there, Evan?
Yeah, he's happy with like-for-like sales, and so he should be. The catch is this. The one thing that he wasn't and he won't talk about is the hoteliers business. If there's ever a business that Woolworths could get rid of, it's that. It's a drag. The way the Big W numbers are getting better, although there was still a negative number on the earnings line, they are strengthening. So he probably will break even next year. Watch that hotels business. He is clearly very, very close to working out a way to possibly divest that business. It would be good for Woolies. It would therefore allow them to probably continue to expand on, the discount that's inside them because of little drags like the hoteliers business and the fact that Big W still requires a fair bit of capital to keep it going, but it is turning around. But he's not wrong. Like-for-like sales in their food business was pretty good.
All right, Evan Lucas, Chief Investment Officer at InvestSMART. Thanks so much for joining us.
Thanks, guys.